I hope you guys doing good. We will take a look at the markets as we usually do. Today's January 6th, 2025, and the markets have already started giving us some nice activity, in particular in the world of Forex. Your USD dropped below 102 for the first time since late 2022. And this is something that we've been talking about for a couple of weeks. So it's nice to see those ideas coming into fruition. So that's what we're going to discuss with a few other bits and pieces as well. But before we start, as always, I need to stress that trading financial markets, unfortunately, is high risk and we may lose all of our invested money. If you're watching the recording, don't forget to pause here and read this through if you haven't seen this before. So, what happened last week then? Euro USD dropped below 102 for the first time since late 2022. And this is, again, not a surprise for us. I think it continues to drop to the downside. On January 20th, Trump takes over. If we would initiate tariffs on that day, I would assume that we could have weakness if they would come out with a big package to try to sort of deport millions of his own, well, it's not his own citizens, but illegal citizens. Then that again would have impact on the US economy, which again could stoke volatility. So I think this more ahead, and maybe your USD is gonna go even way below parity. So maybe I don't know, maybe 90. Well, 1 euro is gonna go at 90 US dollar cents, possibly. We're talking about quite some big moves that could potentially play out in the next couple of months. So definitely want to keep on focusing on Forex and Euro USD. What happened last week as well? We have manufacturing data from the US. It's still below 50, so still contracting, but not obviously contracting as much as people thought it would be. People thought it was going to be 48.2, but instead it was 49.3, so not as bad. On the geopolitical front, Israel is preparing for potential conflict with the Hutu militants in Yemen. This is supporting oil prices, which push to the upside. Um, that's we'll see what happens, but obviously, more stress, particularly on oil prices, makes a lot of sense, given how they've been attacking, the Houthi militants have been attacking, for example, like oil shipments, not also oil, but ships in general, I would say, through the Suez Channel. So things are looking quite not too good from a geopolitical perspective, and that's definitely impacting oil prices. What else? We had some data from China, slightly better than expected, but sorry, worse than expected, but at least it was the third month of expansion. And in Europe, we had some comments from ECB members where one said that they think the ECB is going to cut rates 4 times by 25 basis points from the current 2% to 3% by the autumn of 2025. What's interesting is, of course, is that with the ECB cutting rates, and then in the US now you're having the opposite. Well, you have a pause and possibly no rate cuts, uh, especially if deportations would kick off, and especially if inflation would take up on the back of this or on the back of tariffs, which would make a lot of sense. We also know that the labor market is doing quite good, so it's at the 8-month low, the jobless claims, which is obviously great news. So, what can you watch this month or this week? Have Eurozone inflation figures that comes out on Tuesday. So that's really important because, as I just mentioned, they want to cut 4 times possibly this year. So obviously, if inflation is higher than the 2.4, maybe 2.6, and maybe core inflation goes up to maybe 3%, then obviously maybe the ECB will also be forced to stop cutting rates. Now, that wouldn't necessarily be as good for Europe because the industrial manufacturing sector is already very weak in Europe. So if you're going to keep rates high for longer, then that's obviously not going to be great. But they wouldn't hesitate to do that if inflation is high. So we could be in a possibly bad situation. On the other hand, it might help the euro a bit on Tuesday if inflation figures are much stronger than expected. Now, if you look at it from a big picture perspective, I don't think they really matter too much because we have the political things happening as well. The fact that there is probably going to have to be like a new election in Germany. They don't have a functioning government. and France as well. They don't have a functioning government, and yeah, it's going to be a bit difficult now, especially with Trump taking power in the U.S. And there's going to be some tough negotiations. Like who's going to lead Europe? It doesn't look too good right now. Now, we also have ISM figures out on Tuesday. That is something that we want to keep an eye on. We have, as I just showed you with the labor market data, the US is doing okay. It's growing about 2.83% per year. So obviously, if ISM comes in as expected or slightly stronger, then that's going to strengthen the idea again that the US economy is doing quite good, that they don't have to cut rates. So that's also something we want to keep an eye on. And the first sort of broader economic indicator for the labor market will be on Wednesday, January 8th. At that point, we'll have the ADP numbers. They are going to be out. 131K is the anticipated outcome, lower than the 146 seen last month. Now, this is an indicator that it's not as volatile. It wasn't as bad as the non-farm payrolls, because remember, non-farm payrolls was like at 12K in October, I think it was. So obviously, if ADP would drop much more, not that I think it will happen, given the jobless claims are very low, but if it would drop a lot, then that would be a bit of a warning sign. But again, I don't think that's going to happen. I think it's going to be rather sort of as expected, and again, sort of confirm that the US is doing okay. On Wednesday as well, we have the meeting minutes from the last rate meeting. At the last rate meeting, they made it very clear that they're taking a break in rate cuts. Okay, and this is just going to shed a bit more light on that. Now, I don't think we're going to learn too much from this, but people will keep an eye on it. Big days are coming out will be on Friday with the normal payrolls. I wouldn't trust the headline figure too much. Okay, this one is moving up and down like a yo-yo. Like there's really very difficult to make any strong, take on this. Rather, I will focus on the unemployment rate. Now we need to understand as well is that people will pay attention to this, even if we don't care so much about it. So we need to combine it. I think the the unemployment rate, though, that's where the truth is. So you need to sort of look at this. If it's very weak and the unemployment rate remains relatively strong, then maybe we can ignore this, and vice versa. The reason why they're different is that these are acquired in two different methods. And then from payrolls, they contact firms directly, while in the unemployment rate, they contact people. So they call people, hey, and ask them, hey, are you looking for work? Are you working? And that's how they get this number. So that's why they deviate. And this is interesting as well. Earnings. Earnings has been very high at 0.4%, anticipated to drop down a little bit to 0.3% month over month. But wage growth is good, and employment rate is good as well. And I think as long as that continues, I will continue to be buying dollars. How about the charts then? So you might remember a couple of weeks ago we said a breach to 108 here on the back of the US election triggered down move, and it has. So we almost gone here from 108 all the way down to 2 almost. If you join the presentation we did on the election night, we're bearish from even higher levels here. It's been very good, to be a dollar bull, and I will continue to be a dollar bull. So between 103.41 and 104.23, I think people are going to be really interested to sell here to target 102 and parity. As for Brent crude oil, I just told you that Israel is gearing up for more conflict, in other words, more fighting really with the Houthi militants that could create more problems in the regions, and that again lifting Brent crude oil prices. So I will be bullish between 75.83 and 74.92. What's even more interesting is this: we're stuck in a triangle pattern here since well, all of December, really, until the end of it, and then we breached. And this is a very strong pattern. There's actually even more data. We're trading sideways for, I think, most of November as well. So we're breaching this, and when we're stuck in a range, people don't really care, like both the consumers and the producers. But when the price starts to go to the upside, they rush to hedge. And I think that's lifting price to the upside as well. S&P, so still the CSET to be buying and the bullish stock indices. So when we did the update last week, we were sort of here. Remember, we were bullish all the way up here. we've been bullish for months, to be honest, but we got stopped out here. All right, we had stops just here, so that got stopped out, and then it went down, and we were neutral. So a bit cautious there, but we said it's probably going to go up, and it did go up, and then it came down again, and I want to continue to be bullish between 5,806 and 5,894. Bill bullish between these two levels, targeting 6K and 6,045. Remember, when Trump, well, sorry, when you have a Republican president, Republican Senate, and Republican House, you tend to get a return of 13% per year. So that means, gonna bring out my calculator now. That means that the index should be at roughly 6,723 by the end of the year. Um, so it makes a lot of sense to continue to be bullish. The question is deportations, tariffs. How is that going to be implemented? And if it is implemented, if it's not implemented, then you only have all these tax cuts, which is obviously good on its own, and that is really bullish. Uh, the other bit, much more difficult to see why we should be bullish in that. Gold prices. So gold prices have been a bit difficult, and we've been warning about it. It's because we're stuck in a triangle or like a range. Before we had a triangle like this, actually for here, where we breached the upside that failed and went all the way down, trying to reach the downside. We could have shorted here to here, but that would have been over very quickly. And now we're sort of stuck in a range. I wouldn't get too excited. It's really difficult to say what's going to happen next. I would just lay low, reach here, takes you down, and push here, takes you higher. But realistically, I think we'll trade sideways. I think we'll be stuck here for another week at least. And hopefully we can narrow down the range by next week. So it's gonna narrow down. So maybe not this week, maybe not even the week after. So maybe trade sideways for another 2 weeks. Unless you're very good at trading ranges, I would have ignored this market. Now here is something interesting. Bitcoin. So Bitcoin is stuck in a head and shoulders pattern with head left and the right shoulder, with the breach here probably taking you down lower. But the fundamentals remain very strong for Bitcoin still. So on stock to flow model, it says we should be trading closer to 500,000. I'm whispering because I don't want to think I'm crazy, but yeah, that's what people say, $500,000 per coin. So that's 5x from here. But you know what's interesting? On January 3rd, Eric Trump, one of President Trump's sons, met with Michael Saylor. Michael Saylor is the executive chairman and co-founder of MicroStrategy, which is the firm, as you probably read about on the news. They're using all their money and also issuing different, uh, raising money, I would say, to be able to buy more Bitcoin. And what's interesting here is that they met on January 3rd. And so maybe they wanted to get his opinion on a Bitcoin reserve in the US. And that's what people are speculating about. They think it's more likely that that's going to happen now. So any news and comments on the back of that confirmation from the White House or Trump, yeah, Trump social X would be very interesting. And if we have a break here, we can push to the upside because this is as we know as a head and shoulders pattern, right? And there's one called the failed head and shoulders pattern, which will break the other side of the pattern. And this is if we break here, we can go all the way up to 18,000. Now you can also short sell here on the break here. But I wouldn't be too bearish. Or maybe you can go down a little bit, but I don't think we're gonna go down to 72K. I don't really see exactly how that would happen unless they say something crazy about deportation, like they're gonna deport more than 2 million people in 1 year, or if tariffs are introduced and they're like crazy, like 50% against Europe, 50% against Mexico, 50% against Canada. No, that could definitely shake the market, but I'm not sure they're gonna go that wild. If anything, look back at Nvidia. Nvidia was very bullish and very strong, and it had a couple of these head and shoulders pattern where the price finally did trigger and we dropped a little bit, but then the market used that as an opportunity to scoop up Nvidia stocks before sending it to new all-time highs. So that is what I would suspect here on a break to the downside. But yeah, the levels are there, quite forward, bullish above, bearish below. And if you really wanted to, you can also buy a rod here. So you got three different options. And that's it. That is today's market update. And let me see here if you have any questions. If not, I'm gonna wrap things up. Okay, so let's say we have no questions. If you have any questions during the week, feel free to just drop them in the chat. We'll be back same time next week to provide you the next market update. As well, don't forget to check out the market news section on thinkmarkets.com on the English version, the international one. You'll find more updates there throughout the weeks alongside our weekly market update. Thank you very much and happy trading.